Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having an absolutely fantastic Friday, bringing that Friday energy to you guys as always. It is a nice and crisp day here in Seattle, so I hope you guys have good weather as well. Wherever you are and however you're doing, thank you guys for hopping on the show with us today. We got George McCleary with us. George is an investor from Portland out here in the Pacific Northwest. One of his videos went viral. I Stole a House, which landed him appearances on Dr. Phil, News Nation, etc. So I'm sure this is going to be a really interesting episode to go into. George, I'm super excited to jump into this. Thanks for hopping on the show.
Yeah, man. Thanks so much for having me, Gabe.
Absolutely. Before we get into the stealing the house topic, I always start these episodes with stories. We like to hear how people got into real estate. It's always useful and educational to kind of track the journey. And I'm sure you have a good story as well. So why don't you take us to the beginning of your story in real estate and tell us how'd you get here?
Totally. So I was a refugee from the banking industry. I went to business school as an undergrad and didn't really know what I wanted to do, but I heard there was money in banking. So I got a job at an investment banking firm and I thought I kind of won the lottery because those are hard to get. But it turns out I really disliked it. So I quit, moved to Australia, became a surfer, and just read a stack of books trying to figure out what I was going to do with my life. Came back, and of course, like Rich Dad, Poor Dad, creating wealth, like, the go-tos. And came back, started, I got my broker's license. I bought a duplex with no money down. Back then, you could get 100% financing, no problem. And I was making a profit on it. So then I thought I was doing pretty well. Thought I was pretty smart. So then I did that with a triplex and a fourplex and kind of worked my way up while being an agent. And then the recession hit and everything just sort of fell apart. And then after that, I actually had a brief stint. Well, not so brief, but I was in the marijuana business for a little bit. But my experience in real estate actually really helped with that. And so then got out of that. And then I've been, I guess, back in real estate investing full time for several years now. And as a developer, house flipper, not doing quite so much brokerage anymore. I'm not taking around people to view houses anymore, but I'm still selling my own stuff. I'm very much a deal junkie. I like to be in there with the deals and mainly doing multifamily, single family, and just now embarked on a flex industrial project. So that's kind of like my next wave, you could call it. I got a real short attention span, Gabe, and I just got to do something new and fun. And so that's where it's taking me now. And then along the way, made a video that went super duper viral and picked up a little side hustle as the go-to guy when it comes to info on squatting and deed fraud.
Yeah, man, that's you mentioned, I always call it the shiny object syndrome. I have that too. I always tell people to focus in on one asset and get good at it. But it's just, there's so many different ways to do real estate and they're all fun and they're all interesting. And so it's just hard to keep focused in on one. Flex industrial is something that I've been interested in myself. I haven't pulled the trigger yet because I keep telling myself, no, you are self-storage and mobile home RV parks. That's what you are, Gabe. Keep going down that route.
Oh,
but I'm
man.
sure one of these days.
That's just a small little pivot from self-storage. I mean, metal buildings, the same deal. So.
Yeah, exactly. So right on. I love your story. You went from triplexes, fourplexes into development, into multifamily.
Yeah.
It's a trajectory that a lot of people take, and it's successful for a reason. I really want to talk about was it a TikTok? Is that what it was that you
originally? Yeah. Although TikTok took it down in a half an hour, but not before a bunch of people had downloaded it and copied it and uploaded it to Twitter. And that's actually where it really caught fire, was on other people's accounts on Twitter.
That's funny. I feel like I might have seen it. I'm not sure, but tell us, for those who haven't seen the episode or the short, what was the content and what did you go into about in that short?
Right. So I woke up on Super Bowl Sunday and I decided to make a video about the ease with which squatters can take over a house in Portland. And literally it's everywhere, but especially like in Portland, Seattle, West Coast cities, it's really darn easy to take over a house as a squatter and then get a bundle of rights associated with that. And I lean politically in neither direction. I'm like right down the middle, but there's been a lot of policies in my city and yours as well, Gabe, that have really affected my livelihood as a businessman and as a real estate investor. And I was kind of fed up. So I made a video. It's very satirical. It's called How I Stole a House. And I basically pretended to be the guy stealing the house as a squatter, going through the playbook with a fake lease, getting inside, telling the cops I actually will have a lease, establishing rights, getting cash for keys. And the thing just exploded. Tens of millions of views, most of them not linked back to me. So people couldn't see that I was like a developer, like one of the good guys in real estate. So because of that, I was getting like death threats, like we're going to hunt this guy down. But most of the feedback was really positive. People understood it, that it was satire and that, this is a serious problem. And so it helped draw a lot of attention to the fact that these laws are just not helping us out as real estate investors. And something needs to change. And so I went on news shows and everybody I had ever met was contacting me saying like, oh yeah, you won't believe this squatter story or this title fraud story. I'm like, oh, what's title fraud? And tell me your squatter story. And so I became like a lightning rod for all this information. So I had a really unique opportunity to help my real estate community. So I created a course called Squatter Defender and some software called Title Fraud Defender to defend against title fraud. And so that's been my little side hustle.
Nice, man. It is the internet is crazy just in that
Mm-hmm.
you can make a single video and all of a sudden you said tens of millions of people have seen that video. You've impacted so many people's lives.
Yeah.
It always blows my mind when I hear those kind of stories.
And they all got something to say about you. And that's a
Yeah.
strange sensation that I'd never felt before. And it's unsettling.
Yeah.
But
No,
overall, I can't complain.
I could imagine. So this experience that you've gone through, I'm sure you have, as you mentioned, kind of gathered stories about people who have gone through this kind of experience where somebody comes in, basically squats in their property, takes it over, you can't get them out.
Yeah.
It's not as uncommon a story as you would think for people to have to deal with that. So what are the tools that you have kind of run into? You can speak from the perspective of somebody living in Portland or just generally that when somebody is squatting in their property, how do you get those people out? And what are the ways that you can, legal ways that you can go about rectifying that problem?
Right. So I like to break it down into three categories. There's squatter detection, protection, and ejection. And those are the three sections of the Squatter Defender course. And so protection is all about just keeping it from happening in the first place. That's your first line of defense. And that is really the most important by far. It's the lowest cost. And I always say like squatting and deed fraud, these are the ship sinkers. These are things that can absolutely just wreck you as a real estate investor. When I was talking to all these people nationwide, the like average cost of actually getting rid of like a serious squatter or squatters was like $50,000 to $100,000 all in, like
Wow.
lawyers' fees, court fees, lost rent, like rehabbing a completely destroyed house. It's
Ah,
wild. And
yeah,
insurance like almost never covers like any portion of that.
yeah.
So, like I said, these are like the ship sinkers. And so that's prevention, then detection, and knowing that somebody is actually like in your property. That's a big one. And then ejection, getting rid of them. And that is what I devote a lot of time to in the course because there's a lot of different ways to do it. If you ever ask your property manager, they're going to say, hey, what you got to do is call a lawyer and get the lawyer to get him out. And the lawyer is going to say, okay, well, we got to evict them. And I'm like, well, why would you do that? And they're not a tenant. It's a squatter. Like,
Yeah.
get out of here. So that struck me as really weird. And so a lot of people that I spoke to had different things that they did. Some of them were conventional, some of them very unconventional, shall we call them. So there's a lot of like warning labels in my course where I say like, okay, here's what this one person did. I can't recommend it. And here's why it's like, a little unsafe. However, they did get the squatters out of there. So, use this
It worked.
information
Yeah, yeah.
as you see fit.
We've in my past when we've dealt with people mostly in RV mobile home RV parks, which is kind of a different story because they can't really do damage to the property because they're just leasing a
Yeah.
space. But a lot of times, they won't pay, they won't leave. And in Washington State, they treat it almost like a tenant in a multifamily unit. And
Right.
we
Right.
our go-to solution is just to give the person money, just pay them to leave, and we say, hey, we'll give you $1,000 if you leave.
Yeah. Just
and
cash for keys.
and
It's
you'd think, you kind of get angry about that, because why do you need to pay them to leave your property when they shouldn't be there in the first place?
it's
But
insane, but
yeah,
what are you trying to accomplish here? You're just trying to
exactly.
reclaim your space, reclaim your home. And I talk about that in the course quite a bit. Like cash for keys, like, there's people that have demanded, like down in California, like they'll take over a Beverly Hills mansion and they'll demand like $100,000 for cash for keys. It
Jesus.
sounds utterly absurd. But I personally, and you as well, it sounds like I've paid out money for cash for keys, not necessarily to squatters, but tenants that are overstaying their welcome. Because remember, squatters and non-paying tenants are different things.
Yeah,
And
different animals.
and sometimes they're like, well, dude, like I can't pay my rent because I have no money and I can't move because I have no car, I got no this. All right, dude, here's $1,500 GTFO. All right, cool. We got a deal. Sign this thing, and it solves the problem.
Yep.
But with tenants, you kind of helping them out. Squatters, you're perpetuating the scam, essentially.
Right.
It
Yeah.
doesn't mean that that's not like a viable option. I actually recommend that people explore that. But you're perpetuating the scam. You're really kind of like encouraging it. And the next guy is not going to thank you for it. But so it is an option though.
Yeah. 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 I never thought about it that way, that you're kind of feeding into their crime,
Yeah.
and giving them positive feedback so they feel like that is a legitimate way to earn money. Yeah, didn't think
Unfortunately,
about it
yes.
that way, which makes a lot of sense. I think I saw a video a while ago where a guy had a unique strategy to get somebody out of his property. I might be butchering this, but if I remember the video correctly, he basically signed a new lease with, it was either himself or like his daughter or something like that.
Right.
And because that was a valid lease, he was able to take that to court and say, okay, this person is, this is my lease. I am the lease, the leasee, lessor. No,
Let's
the
see.
owner's the
Yeah.
lessor. I am the rightful person to be living in this property, and so
Right.
that is like an efficient way to get them out. Is that something you've dealt with? Is that like a viable
Yeah.
strategy?
It is, yeah. So it's great for a lot of reasons and less great for others. And so the nickname for that, it's not official, but that was probably Flash Shelton was what you probably heard about. And
Okay.
he's famous for this because he's kind of the guy who basically invented squatting on the squatter, and that's where you have a
Squatting
lease
on the
either with
squatter.
your yeah, it's with yourself or you use a third party anti-squatter contractor. These people exist, and now I form relationships with them, which is why you should call me if you ever have a squatter. Because
Anti-squatting contractor. That is
yeah,
interesting.
yeah,
Huh.
no, it's actually a thing. You can follow them on TikTok, and it's a freaking riot. So basically, what they do is they, like you said, you get a lease and they move in with the squatter because
Huh.
occupying a property as a tenant is a whole lot easier than taking somebody who's established rights to some extent as like the occupant or the tenant or the squatter and extracting them out of there because possession, as we all know, is 9/10 of the law, and the shirt on your back is presumed to be your own unless you can prove otherwise. And a lot of times, proving otherwise, especially in blue states, can take forever. So instead of pulling them out, you put someone in there who makes their lives completely miserable. And they do all sorts of stuff that's, not illegal, but, they put up cameras, turn their life into a reality show. And eventually the squatter usually thinks to himself, like, okay, this is terrible. This is no longer, like a nice private place to live. I've got this guy here. The downside to that is that these are desperate,
Dangerous people. Yeah.
sometimes dangerous people.
Yeah.
And I'm not sure about you, man, but I'm not going to move in with one of these people or five of these people. I got a family. And so hiring somebody to do that is really the way to go because you get rid of your squatter quickly. You don't put yourself in danger. You're going to be cutting a check to a lawyer or the courts or, for as long as you have the squatter. And that could be months or years. Whereas if you can efficiently move it, for a fair price with a contractor who's, versed in these things, he's wearing body armor. He knows exactly what to do. He's got his buddies with him. That guy is who you want to do this type of job for you. And so
Yeah.
That's why I say, just call me up. Let me put you on touch of these things.
Yeah. That's so funny that's like a legitimate business now.
It's what
To go and
it's what
squat
it's
on
come to,
people.
man. It's what it's come to. We're on our
Uh,
own.
so if somebody did want to take that route, what's the price tag that they're looking at?
Oh, like 5 to 25K. I mean, at the higher end, it's when you've got like, an entire like street gang occupying your property. And it's like, okay,
Yeah,
this
goes
is,
based on risk. Yeah, that makes
yeah,
sense.
exactly. Whereas if you've got somebody who's just, like I've had low level squatter situations where, like a homeless addict is like woken up in one of my development projects or a flip project. And I say, all right, dude, get the heck out of here. And, we usually don't have any trouble, usually. But but then if they stick around or something like that, these are not sophisticated situations. And, but then a lot of times, especially as this information is proliferated among the criminal community, you do have people that like know the playbook. And that's when you gotta hire a professional.
Yeah, that makes sense.
Yeah.
You mentioned earlier title fraud. That's
Yeah.
something that I know very little about. Tell me, what are the common forms of title fraud, and then how do you combat that? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
There's a bunch of different ways to do it. There's like impersonation. That's really big in Florida right now. Like pretending to, hi, my name is Gabe. Here's my fake ID. I want to sell this property, up in Seattle or whatever. That's one way. But the most insidious form is stealing someone's identity and then forging a deed into that false identity that you've got a bank account in and then reselling the property, because that steals all of the equity from that homeowner. And you'd think that there would be safeguards along the way. And there's things that are like intended to be safeguards, like the notary stamp. But dude, you've seen the notary stamp. It's a stamp. It's not like
you can easily replicate that.
it's not $100 bill or anything that has like a real high degree of security to it. So they basically they're forging deeds, they're taking it to the county, and they're getting recorded. And the fact is, in pretty much every single county in the entire country, you can just show up with like a slip of paper, grantor, grantee, address, legal description, notary stamp, signatures. They don't check signatures. There's no signature database. Like, no, they just record it. And title transfers. And if you're judiciously checking your title every single morning, with your morning coffee, like, okay, well, wait a second, my title's been transferred. Like, this isn't good. I need to do something about it. So then we've got a whole procedure at Title Fraud Defender. We tell you what to do, and so you can make sure your equity doesn't get stolen. But nobody does that. Nobody checks their title. So we do it
I've
for
never
you.
checked my title. I'm going to be
No,
honest.
no, I mean,
I
it's
just
because
assume that
you
everything
don't
is
need to.
okay, which, yeah.
But now it turns out now you do, because there's about 10,000 cases last year of it. It's
Wow.
estimated. And each one of those, it's at a minimum, even if you don't get your equity stolen, if you got a low level thief who can't figure out how to do it, you still have to go through a quiet title lawsuit. And because you can't just call up the county and be like, "Hey, this deed was fraudulent." Like, it's BS. You gotta fix it. They're gonna be like, "Ooh, yeah, no, we can't do that." Chain of title is like a whole thing. So
Right.
it's a lawsuit. It's a whole thing. So the quickest way to avoid losing all your equity in any one single property is just get a subscription to Title Fraud Defender. It's the lowest cost, most sophisticated software out there. And we just launched, and it's going great because investors are figuring out, like, yeah, they don't want their equity to be stolen. And turns out that can happen.
Yeah. Yeah. That would be, identity theft is, so prevalent these days. And it's a shame because, it's they're attacking things that really involve your livelihood, and that is something that you just don't want to be vulnerable.
Oh yeah.
So a good, definitely a good service that you guys provide.
Yeah,
Um,
man. Yeah, my wife got credit card frauded recently, and they stayed at like a La Quinta Inn in Michigan using her credit card, and she was all distraught about it. And I was like, "Yo, they're gonna refund you. Like you're fine and everything." And I'm thinking to myself, like, it's like $100 hotel room, and it's the same sort of identity theft and like procedure as you do with title theft, where you get the entirety of someone's equity, which you average nationwide is like 300 grand. I'm like, $100 hotel room or $300,000 in home
300,000. Yeah.
equity if they like read the right article on how to do it. Like I could see how this crime could take off, and that's why it is taking off.
Yeah. Yeah. It's scary.
Totally, man.
All right, I just took a peek at the clock. We are running it down. We've spent most of the time talking about title fraud and getting rid of squatters, but I
Totally.
do want to spend just a couple minutes on your own investing. So
Yeah,
you mentioned you
absolutely.
guys do you do developments and you do flips and you invest in multifamily and flex
Yes, sir.
industrial. So a
Yeah.
lot of things. What is actually? Let's just talk about the flex. Why did you choose flex and you're developing it or are you just buying for your portfolio?
I'm developing it because these things trade at cap rates kind of similar to multifamily these days. They used to trade at higher cap rates, and I've found that there's a great opportunity for being a developer in this space because the numbers are just they're simple and they're profitable. Because with multifamily, because I'm developing some multifamily here in Portland right now, and as you might guess, it's hard. Getting permits is difficult. Construction process is, it's complicated because you're building someone's home. With flex industrial, you're just basically building and demising warehouses and
Mm,
into little spaces. And so you got to think of what you would want if you're like an electrician or a candle maker or like, someone like, setting up like an Instagram shop. You've outgrown your garage, but you're ready to have like your own space of like 1,500 square feet, something like that. And you want it to be as cheap as possible because you just need like space. And there's a lot of people that require that space. So demand has gone up. And in really round numbers, you can build it for like, well, just this isn't totally right, but like $100 a foot, charge $1 per foot, and you can sell it for like $1.50 or $2 per foot. And so just the math is, relatively simple and you can do it like anywhere. Whereas with multifamily, I gotta like be right there to point stuff out and be like, okay, this bathroom's door is too small. No, with a flex industrial, it's just like a box. And
yeah.
I could build that in Timbuktu if I needed to.
Yeah, so that's exactly one of the reasons why I've been interested in it, because it's like self-storage. It's very
Yeah.
simple
Yeah,
and
very simple.
it's there is need. The problem, and I'm just using self-storage as an example, is for self-storage, it is most metros are overbuilt. So they're because it's so simple to build, people have gone out there and just slammed them down wherever they could, and so the per capita net rentable square feet per capita is just way too high.
Yeah.
Are you finding that to be true for flex, or how do you decide where to do the ground up construction?
Not yet, although that has definitely crossed my mind. I'm not the only guy to ever think to himself, like, okay, I can develop anywhere in like the entire US. Let's just run out there and build it. The biggest, I guess, impediment that I've found is zoning because you need to have like at least like a light
Industrial.
industrial
Yeah.
or like a general commercial zoning. And it also helps to be out in a county to get like cheaper land prices because remember, like, what gets built on high priced land, like, like skyscrapers, things that you really gotta have like a really good high floor to area ratio. Whereas with flex, you have like it's completely the opposite. You're building a really cheap building on a cheap piece of land. And the only way to make that work is if you're kind of like outside the city. So then if you've got zoning that's restrictive of that use, because there's a ton of land devoted to like agriculture, like
Mm,
grazing cattle. And unfortunately, there's the limitation, like the bottleneck that I've found is exactly that. It's land that you actually can build flex industrial on. But there is enough of it. And, imagine it's got similar zoning to storage and sounds like that's getting, that's gotten overbuilt at least a little bit. So yeah, I'm just keeping my eyeballs on it because there's a demand for it. But just like you said, you can build a lot of it in a short amount of time.
Yeah. Have you gone through, I mean, ag is like probably the biggest, my guess is it's the biggest zoning for in terms of square footage in the United States.
Oh
Like
yeah.
most of the land has to be ag.
I'm just shooting
Um,
from the hip, but it's got to be by a country mile.
yeah. Have you gone through the process of taking that zoning and converting it to light industrial, or are you only looking for things that are already zoned industrial or commercial or something like that?
I would love to do that, but I do a lot of business in Portland. And if you go to the city and say, hey, change the zoning on this in Portland, like buckle up for like a multi-year battle of bullshit. Yeah, it's just it's not what you want to do around here. In other places, like, you just go see Agnes down at the county and she just thinks about it for a minute and stamps a thing. Like, sure, like if that's if that's how it works down there, like I'm routinely astonished by how like other counties are just so much simpler to work with than these West Coast cities. So I could see myself doing that one day, but I'm just sort of I guess I'm kind of have an aversion to it by way of, the trauma that developing in Portland has inflicted upon me.
Yeah. One of the somebody that I know in the storage space, they said that their competitive advantage is that they are willing to take the beating that it takes to rezone something in King County in Seattle. And
Yeah,
he says that's why we're
that's
successful because we're willing to deal with all the shit that you have to deal with when you're changing the zoning.
yeah, no,
And if you're
that's
willing to do that, then then go for it.
yeah, no, I mean, people have built entire careers on being able to take a punch, and that's and that's a niche, and I love it. I commend them for that.
Yeah. All right, man. That wraps up the initial part of the episode. It's time to jump into the quick question round. Are you ready?
Yeah, let's do it.
Let's do it. Starts with books or any form of education. Could be a podcast you like, a conference you went to. Anyways, I need two recommendations: one for general life wisdom and one for real estate.
Okay, so I'd say if I had to give general life wisdom, I read a book called, I've actually read it a few times recently, called The Way of the Superior Man. And
Oh
it's
yeah,
basically
such a good
like,
book.
oh, you know that? Okay,
Oh, I've
cool.
read it
Yeah.
so many times. You're the first person to recommend that book, but I
Oh,
really
get
like
out.
that book. Yeah,
Yeah, I mean, it's a real estate podcast, and that's what we're talking about. But like, a lot of this kind of relates back to like our purpose. Like, why do we work as hard as we do? Why do we try and create generational wealth? It's born from like a purpose, and a lot of it's like deep seated within like our psyche as men. And so that book kind of talks about that. And I've just drawn a lot of energy from it. Thinking about it with like my life, my career, my marriage, my kids. And I think that a lot of the men and even the women out there actually could really benefit from it. And it's not toxic masculinity. It's the opposite of that. It's
yeah,
it's using masculinity to like just be the best man you can be.
yeah. Well, yeah, and I even like people try to wash over the differences between men and women these days, and I really do feel like men and women we have our own purpose.
Oh yeah,
It's very distinct or specific to an individual, but I like that book because it really goes into the spirit of a man and how you kind of live your best life and achieve your purpose. But great
totally.
recommendation because you are the first person to say that. And in terms of like self-help ish kind of books, that's definitely one of my favorites.
Oh yeah. Yeah, very cool. And I guess if I had to do one more book, I really liked. It's a very short, very short read, but it's The Tribe of Millionaires. It's basically plugging the GoBundance tribe, which I'm part of. But it's really about finding a community and a group of people who think like you do, that are on your level or like a level above you, that can help you, just once again be the best you can be, to be able to consult with, to confer with about all the things in your life, how to level up your real estate investing, how to level up your abilities as a father, as a provider. And I think that community is just really, really important. And there's a lot of overlap between that and business these days. And whatever you're into, there is a community for it. There is a coach. And that kind of drove that hope to me. So that one's a big one for me.
Nice. I like it. And that was Tribe of Millionaires, you said?
Tribe of Millionaires. Yeah.
All right. All right. Next question is for your younger self. So let's go back to the George who was just getting that first job, you said, as a back in banking. Go back to him, look him in the eye, give him one piece of advice moving forward.
Oh boy. Um, I'd like to say, I'd say don't sweat the small stuff. I spent so much time in my career, and this is up through today, really just sweating bullets over things that are not going to like change my situation one way or another. I'll complain about something to my wife about like what's happening, like, oh yeah, this thing is an absolute, I'm taking an absolute bath on this deal. She's like, well, are we gonna have to move? Are we gonna have to like pull the kids out of school? I'm like, what? No, absolutely
That's not
not.
that
Like
bad.
it's like not even like 1/10 of that bad, but like it's still bad. I feel like, I'm
Yeah.
stressed about it. She's like, yeah, no, I've been going through this with this same girl for, 15, 20 years. Like, she's learned to kind of like, yeah, there's ups, there's downs, there's good years, there's bad years, good deals, bad deals. And if you sweat the small stuff, you're going to, be bathed in cortisol all the time. And turns out it's a bunch of all small stuff. I like to call my career of like a very noisy graph upwards, but there's a lot of ups and downs along the way. And if you stay in the game long enough, that's going to be it. So you might as well enjoy yourself. So try not to sweat it and think of it. It's only it's only money, it's only business, and enjoy the ride.
I think that is very good advice. I like how you kind of describe it as a noisy graph going up because there's peaks and valleys. Doesn't matter what point of your career you are, there's always going to be peaks and valleys. And
Hmm.
when the valley hits, in the moment, it feels so bad and you feel like, oh no, like what happened? But if you take a step back, it's really not that bad. And so I feel like that's
Exactly.
very good advice to take.
Totally.
Um, Next question is, sounds like you are focused in on Portland. So you can use that can be your answer, but we always like to ask, the United States is a big place. There's a lot of opportunity. So what is the metro that you're most excited about investing in today?
This might surprise you, but I'm going to stay with Portland because I am a big proponent of going into the burning building when everybody else is trying to find their way out. Back in 2023, I was raising money for this apartment building that I'm building. And you can imagine what it would be like raising money to high net worth individuals for an apartment building, multifamily in Portland at that time. We were all over the news as being like this drug-addled dumpster fire. And most people are like, dude, I love you. I love this building. I love this project. But Portland, how about change that to like Austin or
Yeah.
like any of these other places? Like, and I'm in, but like, dude, like, get the fuck out of Portland. What are you doing? And I'm like, dude, I feel you. But here's the deal. Everybody else's project is like, they're not getting financed. The interest rates are up. Like, it's not happening. If we go vertical, if we can just get this thing funded, we will deliver to market when nobody else is delivering. And we're going to do great. Just trust me. And they're like, okay, thanks, but you're awesome, but pass. And some people didn't pass, and we did get it funded, and we are going to deliver based on like permits and how long these things take to build. It's going to go on to market when basically nobody else is there. So, these things, these market cycles, construction cycles, it's hard to take those type of risk when everything around you is on fire. But I got a feeling it's going to work out just fine.
Yeah. Yeah. Wasn't it like I think it was Warren Buffett or somebody who said you should always zig when everybody else zags.
Hmm.
That is, yeah, it's good advice because when everybody else is running away from a thing, that means there's opportunity that they left because they've vacated a space. So um,
Exactly. Yeah.
good advice. And that leads us to the next question. It's about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So what's your favorite way to generate leads and find new deals?
Boy, I used to have like this whole machine of like, I was essentially like a wholesaler, like, searching for deals, going direct to seller. And it cost like a ton of money. And I did get some deals from it. I got a lot of my flips and development deals from it. But it was costing me just a ton of money. But then I'd look at the end of the year, like where my deals came from. And I was noticing like I was doing a little bit more partnerships and more deals that I got just because like, a friend called me up or like, like a wholesaler that I knew, and it came back to relationships. And so if you really double down on relationships, then you're going to cut your costs and really kind of up your enjoyment of this
Yeah.
whole thing because talking to sellers and having to reestablish rapport, 99 times a day just is like it kind of wears you out. And if
Yeah.
you have somebody else do it, they're not going to be as good at it. And if you hire a VA to do it, they're definitely not going to be as good at it. So when it's on you, and you can actually talk with the people that you want to talk with and convince them to, you are the value that you are going to bring to a deal in either a partnership or like the ease of transaction. That's kind of where I landed. My marketing now to find new deals has actually been a goose egg for like probably like a year now.
Yeah.
And yet I still have a pipeline of deals. And I just like anytime there's like a conference, I'll go to it. Anytime I can like have lunch or coffee with somebody that I know, like, hey, so what are you working on? Hey, that sounds fun. You know, it's funny. I've got some capital really into place now. Like, we could work together on this. And it just leads to more stuff,
Yeah.
relationships.
That's funny. That's the exact experience that we've had in the past like year and a half. I used to focus exclusively on off market deals, and we got some deals done. But it did cost a lot of money. In fact, I think, was it last year we spent like 50 something? Yeah, it was an insane amount of money.
Yeah.
But we didn't get anything from it. And it was just this year I've been focusing in more on just calling brokers, talking to brokers. And it's a strategy that I like so much better because I feel like I can just kind of develop a relationship. I hate talking to sellers. No offense to the sellers out there, but
Yeah.
it's just I hate that follow up, and just talking with brokers is so much more enjoyable. And it really does just come down to relationships. So yeah,
Totally. And
that
those
definitely.
brokers want to double end those deals. They want to get both sides, and they'll screw their sellers. They just want to get both sides. And
Yeah,
you can get a deal through brokers. I don't care what anybody says. It can absolutely happen. But especially on the commercial side, yeah, the brokers they want to double end it.
yeah, I 100% agree. All right, next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, most of the time something goes wrong and we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
I actually love talking about deals where I've lost money. There's only been a couple of them, maybe a few, but but one in particular, um, I will never do another condo deal of any capacity ever again because I've done two of them and they both sucked. One barely made money. It was way too much work, and the other one lost money. And the one that I lost money on was not surprisingly during the pandemic. And
Mm.
it's not, but the thing is, it's not like I bought it pre-pandemic. It's like, oh my God, the pandemic hit. And no, I bought it like during the pandemic because I'm an idiot. And I was like, yeah, this is going to work out great. I'm getting such a like slamming deal on it. And turns out that people didn't really want to like live in a condo building in 2021. So my ARV went like this, my construction costs went like this because there's a bunch of like HOA bullshit rules about you got to have this type of sliding glass door and it
Ah,
happens to cost like, like 20 grand or something. So suddenly I'm like, ooh, I'm gonna lose money on this and this has been months of work. And and plus like there's like other people that like lived in the building that were complaining about just like having construction going on. And
yeah,
I'm like, okay, this is a nightmare. I'm never going to do this again. And I lost money. So the
that's
lesson, don't friggin' mess with condos. Just let it
it's
go.
funny because you're not the first person to say that. There was on this podcast, I've had multiple people come on and say that they just hate doing condos. I've never thought about it myself, but it's I mean there must be something there if multiple people say they don't like doing condo deals.
Yeah, no, and people are always like, if I'm gonna buy my first house, I'm gonna get a condo. I'm like, dude, I don't care if you
Just
have to
don't do
live
it.
out in the friggin' boonies, just buy a piece of dirt, own it fee simple. You own it all the way to the center of the earth. Did you know that? You own the land. It's up to you. It's
Yeah.
so much better than a condo. Save up.
All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you, and then what can they expect when they reach out?
So I'm very easily findable if you just Google George McCleary or McCleary Realty and Development. You find all my socials. I could list all of them off, but I'm on all the platforms as either under my name, George McCleary, or McCleary Realty and Development. Um, but yeah, shoot me a message on there. I'd love to hear from you. If you've got a squatter question, a squatter problem, or want to know more about deed fraud, then find me there. And if you want to take the Squatter Defender course, that's at squatterdefender.com. And then if you want to look at Title Fraud Defender to protect your home titles, make sure you don't get your equity stolen, that's at titlefrauddefender.com. And I actually, Gabe, I've got a promo code for you and your listeners for 20% off of both of those. The Squatter course is $199, and Title Fraud Defender is like as high as $6 a month, but as low as like $2 a month if you sign up a big portfolio. And that is that promo code is REI Club. So enter REI Club, no spaces, and it'll get you 20% off of the Squatter course or Title Fraud Defender. And if you want to contact me and just shoot the shit, I'd love to hear from you. I like talking about real estate.
Perfect. Well, I appreciate you offering listeners that. If you guys want to take advantage of that offer, all you got to do is just click the little more in the description. It'll pull down that description, and in there you can find George's links. It's pretty easy to remember, though: titlefrauddefender.com and squatterdefender.com.
Yes, sir.
All right, man. That wraps it up. Thank you very much for hopping on the show.
That was so fun. Thanks so much, my man.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.